Salam Sejahtera, I'm Pang Zijing from Group 4 and these are my group members Anissa Siti Nurshazliana binti Al-Nizam, Muhammad Hasbullah Fahim bin Hassan, Muhammad Rizwan bin Shaharuddin and Nik Muhammad Sayuti bin Nik Muhammad. So we'll talk about our report for the assignment. For introduction, globalization and market liberalization result in intense rivalry, which necessitates new management approaches. As a result, management accounting has taken on a larger role in delivering information that aids and also gives impacts on company decision making. So what is management accounting? It is a practice of giving financial information and resources to managers to assist them in making decisions. Developing management accounting strategies supports firms in performance planning, control and monitoring. In order to improve the organizational performance, it may also acquire various financial management techniques. So by studying the topics in management accounting, we are able to answer the 3 questions given for this assignment.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Anissa Siti Nurshazliana binti Al-Nizam, and today I will continue this presentation. And now we're going to talk about definition of data and information. Data are raw facts, events, numbers, and transactions which have been collected, recorded, stored, but are not yet processed. Data consists of numbers and characters such as alphabet and special symbols which are used to record facts and events about activities occurring in an environment. Meanwhile, information is processed data. It is obtained after subjecting data to a series of processing operations which convert related groups of data into a meaningful and coherent form. Processing could be in the form of addition, subtracting, comparison, sorting, and rearrangement. This makes information useful and meaningful. In other words, information could be defined as the desired form to which data is finally transformed after undergoing a series of processing. Next, we are going to talk about the difference between data and information. There are a few differences between data and information. So the first one is data is a raw, which is an unchangeable fact, while information is organized and sorted fact. Next, data serves as input into the computer system, and while information serves as an output from the computer system. Furthermore, data is observation and recording are done to produce data, and information is analysis of data are done to obtain information. Then, data is the lowest level of knowledge, meanwhile, information is the second level of knowledge. Last but not least, data by itself is not significant, but information is significant. So next, I'm going to explain the attributes of good information. Characteristic of good quality information can be defined as an acronym accurate. Accurate. Information should be fair and free from bias. It should not have any arithmetical and grammatical errors. Information comes directly or in writing from likely to be more reliable than it comes from indirectly from hands to hands or verbally, which can be later retracted. So next is complete. Accuracy of information is just not enough. It should also be complete, which means facts and figures should not be missing or concealed. Telling the truth but not fully is not of no use. Complete. Accuracy of information is just not enough. It should also be complete, which means facts and figures should be not missing or concealed. Telling the truth but not fully is of no use. So the next one is cost beneficial. Information should be analyzed for its benefits against the cost of obtaining it. In business context, it is not really worthwhile to spend money on information that even cannot recover its cost, leading to loss each time the information is obtained. So next is user targeted. Information should be communicated in the styles, format, detail, and complexity which address the needs of users of the information. And the next one is relevant. Information should be communicated to the right person. It means person which has some control over the decision expected to come out from obtaining the information. Other than that, authoritative. Information should come from reliable sources. It depends on qualification and experience and past performance of the person communicating their information. Next is timely. Information should be communicated in time so the receiver of the information has enough time to decide appropriate action based on the information received. And the last but not least is easy to use. Information should be understandable to the users.
Next, we are going to discuss the limitation of management information in providing guidance for managerial decision making. First, management accounting information such as monthly management report are not tailor-made for decision making purpose. The information can be general, representing the whole organization or the division or a function within the organization. Second, management accounting information are based on historical, present and future data. Decision making requires futuristic information that can be used to estimate the possible outcome of a decision. Next, management accounting information are internally oriented. Decision making requires assessment of external opportunities and threats. Other than that, global environment cause price and rate to change. Changing values directly affect the costing function, therefore serve as a limitation. Lastly, decision makers need to deal with risk and uncertainties imposed by uncertain future event and environmental factor.
Assalamualaikum and good morning. I'm Muhammad Rizwan bin Shaharuddin, number matrix D202010934242. Today I want to talk about source of data. Describe source of information from within and outside the organizations, including government, statistic, financial press, professional of or trade association, quotation and price list. Organizations have access to a variety of information sources, both inside and outside the organization. Such data will be used as input into an organization's management, accounting, and decision-making processes. It might also include more types of classification like qualitative and quantitative data. 1. Qualitative data is designed by their very nature to reflect some aspect of what is being viewed. It might not be able to put a monetary value on the effect of the data. For example, tendencies arising from a clause decision that have resulted in decline in employer morale and loss of customer goodwill. Number 2 is quantitative. Those that can be measured and identified on a numerical scale. Statistical techniques can be used to analyze quantitative data, and table chart, histogram, and graph can be used to present the result. For example, percentage of absentees for a lecture and total profit earned for a financial period. Number 3 is primary data, generated through surveys, observation, and experimentation directly for first-hand source. It is information that has never been published before, obtained from fresh or unique research, and gathered directly from the source, such as in marketing. 4 is secondary data. Data that has recently been gathered and researched. The internet, libraries, business reports, newspaper, governments, and banks are some source of secondary data. Data that has already been gathered for another reason, but can also be used for the current one is referred to as secondary data. How to explain the use and limitation of publishing information or data? One is internal source of information. Example, accounting system, payroll system, and strategic planning system. Second is internal source information. For example, government source, business contact, trade association, trade journal, the financial press, business press, and other media, and the internet. Number one is internal source of information. First, accounting system. Accounting system use invoicing and billing, online payment, expense tracking, bank reconciliation, timesheets, and project management and report generation. Limitation of accounting system, loss of data or service, incorrect information, system configuration, and fraud. Second is payroll system. Payroll system use improves complements, calculator deduction, and net income, prepaid tax form, keep records effortlessly, ensure timely payments, and prevent misclassifications. Limitation of payroll is takes time to learn how use payroll system, can install on limited number of computer, must secure and backup and the payroll data, and be responsible for payroll submission and tax filing. Third, for the internal source of information is strategic planning system. Strategic planning system used to provide clarity, direction, and focus for your organizations, drive organizational alignment, and a plan communicates your message. Limitation of strategic planning system is complex process, time consuming, difficult to implement, and require skillful planning. Now we go to external source of information. First one is government source. Government source use to offer information for microeconomic planning, which is economic policy making at the national level, and provide the secondary aim to giving industry relevant background information for making future policy decision, including collecting money. The limitation of government source to having the potential to be influenced if their revelations was foreseen, whether to hide, embracing event, or unlawful activity, or to uphold the government in question's reputations. Then now, what the government permits the general public to know is other restriction. The second in external source of information is business context. The business context use this information frequently free and can be obtained via the company's regular business relationship, such as its customer and suppliers. Limitation of business context bias diversity in willingness and incentive to assist, provide this that may of differ potential long travel distance and time constraints. The third is trade association and trade journals. Trade association and trade journals use many of these organizations publish their own industry or trade publications that are valuable to business in that area for the news and other informations. Limitation of trade association and trade journals is not intellectual in nature, rather it is focused on particular fields. Next is financial press, business press, and other media. There are specialized business and financial channels and programs like Boomerang TV, accessible on digital TV service offered by satellite or cable network that provide both national and international coverage. Limitation of financial press, business press, and other media only provide a restricted perspective. Specific information can be considered in order to uphold the legitimacy of the ruling government. A newspaper might serve primarily as for propaganda, business interests, and political objective. The last one in external source of information is internet. Internet use offer a number of information communication facilities. E-commerce refers to the practice of many business conducting business online. Limitation of internet lack of a central directory. The difficulty in finding information and websites, the lack of filtering or editing measure, and the lack of quality guarantee or validation. Then, depending on network requirement for computer and ICT skills, as well as expenditure associated by addiction time, it may be delayed. The impact of the general economic environment on cost revenue. Business productivity and financial success will be impacted by shifting interest rates currently, exchange rates, inflations, and overall economic activity. Consumer may also be effective when ordinary living expenses such as mortgage payment arise. A decline in the purchasing power of a unit of currency is reflected in inflations. The amount of one currency that can be exchanged for one unit of the other currency. The value of international trade can be impacted by exchange rates between nations. Visible and payable balance in foreign currencies are subject to risk if exchange rates fluctuate. Business will be impacted by the overall state of the economy, include whether it is experiencing a boom or bust.
Question 3a. Indirect data capture refers to a sort of data entry or data input with no data entry is required. Data is entered into the computer with the use of a scanner. A specific reason, for example, barcode being read at a store so that the product may be identified, or account information being directly accessed from the chip included in a credit card, motivate the collection of the information. Direct data capture include costs, such as those incurred in associating different barcode to different items, which must be taken into consideration. The cost of gathering, processing, and generating internal data can be broken down into three categories: acquisition, processing, and production. Cost associated with direct data acquisition, cost associated with processing, and costs that are not directly related to a product or service. Direct data collection eliminate the need to manually enter data into the system, so saving time. Instead, a computer reader enter the information. Costs include the purchase of the appropriate equipment such as barcoding and scanners, as well as the cost of labor to access data collection. It is necessary to feed data into the system during processing phase. Labor costs as well as data analysis are included in the cost. Processing expenses will comprise costs associated with processing and evaluating the information, such as costs associated with input data, and costs associated with analyzing that data to obtain more relevant information. 3b. It is possible to use information inefficiently. As an illustration, a reduction in the quality of the information is a result of an overload of information. Information is sometimes accurate but not required. Due to an abundance of information, poor decision making occurs. There are too many things to focus on, hence concern are not follow up on the emphasis should not be placed on the wrong things. That is just on business unit and targets that are simple to monitor and report on. Costs associated with obtaining outside information. There are 5 different categories of expenses or related costs. Direct sales costs, such as those associated with database subscriptions, journal and other publications, and costs associated with marketing research surveys, among other things. An example of primary data. Indirect access costs include time spent searching for relevant information for a specific project, among other things. Management costs are the expenses incurred in the collection, processing, and dissemination of information. As previously noted, time might be due to information overload or duplication of information in some situations. Infrastructure cost is the usage of the internet necessitate the establishment of network, server, and the other related equipment. Time theft refer to the stealing of time and the loss of time that occurs as a result of the authorized use of internet resource.
Now we move to the conclusion. In conclusion, an organization can use the method of management accounting as a step in making a planning, monitoring, control, and decision making in obtaining a profit. If handled properly and effectively, this management accounting technique may help a firm become profitable and perform better day by day. This is due to the fact that management accounting is an organized process that will identify, measure, gather, analyze, interpret, and communicate financial and non-financial information to decision makers in order to support them in strategically planning, evaluating, and controlling resources. The best decision in management accounting must thus be based on information rather than number. However, the data we get is still insufficient to support management accounting. High quality and relevant information is likely to be advantageous to both internal and external consumer. Therefore, we must locate trustworthy information if we are to successfully handle our accounting.